Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, good morning and welcome. You're watching Chartbusters on CNBC TV18, the show where we highlight all the buzzing stocks of the day, get you expert advice on how to capitalize and trade on these stocks. All that packed in the next half an hour. I'm Mangla Malu and with me is the birthday girl Surabhi Upadhyay. Happy birthday, Surabhi.
Thank you very much,
It's an honor that you've joined on this show on your birthday. We wish you a healthy, wealthy, prosperous year going forward, and may this be the best year until the next year.
Fantastic. Thanks very much for those warm wishes. I think prosperity and wealth is something people on the street would also be looking out for.
Absolutely.
Considering this market is refusing to make up its mind where it wants to go, it's the same story that's continuing even today. We're talking about the index, which is absolutely little change. You've got, what, a 2-point drop? That's about it. But the bigger problem for me this morning, Manglam, is something that continues from yesterday. A lot of the mid-caps are seeing a lot of unwinding.
Absolutely.
There's a fair amount of pressure on a lot of stocks, a lot of the PSU banks, some of the other bigger stocks like CG Power, etc. Some of the Adani group names are slightly on the weaker side, as are a couple of the ADAG group stocks. I think the mid-cap market is something we need to watch out for carefully.
Absolutely. That is something we will be watching out for. Just watch out for the fact that right now, as we speak, the Adani Enterprise stock is at the low point of the day, down 6%. Quality is returning. Hindustan Unilever at the high point of the day. EID Perry as well, our ticker team is telling us about that. But just watch out for the advanced decline ratio. By quality, I meant quality, not quality limited. There you have this one. EID Perry is at the high point of the day. The advanced decline ratio, 2 in the green for 1 in the red. As we move forward, here's a look at all the top stories that we're tracking this morning. The rupee hits a 19-month low opens weak, and escalating trade war tensions between the US and China dampen investor sentiment. As a result of the weaker rupee, the IT stocks are among the top Nifty gainers.
Oil prices rise as the US State Department asks oil buyers to cut Iranian crude imports by November. Brent trades above the $76 a barrel mark, while marketing companies take a hit.
Reliance Jio crosses 200 million users in record time. Subscriber base in May comes close to Idea and Vodafone. Reliance Jio, remember, now is #1 in data traffic.
Positive commentary at M&M's Investor Day. The company targets to increase domestic tractor market share to 50% and also plans to hike contribution from global operations.
And public sector banks under pressure. Non-performing assets in banks could cross the 12% mark by March next year, warns the RBI's Financial Stability Report. Expects bad assets in banks under the PCA to cross 22% this financial year. All right, some of the cuts in the BSE Oil and Gas Index are at the low point of the day. We are seeing cuts in excess of about 4.5% for all the three frontline oil marketing companies, while Hindustan Unilever continues to buzz higher, 1650 on that. So these are the individual stocks on the index. The index absolutely flat as we speak. How do you trade that index? Ashwani Gujral joins us after his break. Ashwani, while you were on a break, looks like the market also seems to be in a break. Do you think they will come out of this break after expiry, or there is some move before the expiry as well?
See, first of all, one thing should be clear that there will be no directional index move for most of this year. The directional move has already happened, and now the amplitude of the moves is coming down. So basically there are two markets, one that keeps making fresh highs, and the riskier stocks, or the beta stocks, they keep making new lows. So either you can decide that I'll buy all consumer stocks, tech stocks, etc., things which are making new highs, or you can decide that I'll go with stuff that is making new lows. Because if you try to trade the index directionally, chances are you'll get all chopped up like we did in the last few days. Now for the day, a lot of strong stocks as in heavyweights are moving higher. So that way possibly the market has support on the downside. It's very clear that everything that's a FMCG or a consumer stock is moving up. So Colgate is a buy with a stop of 1180, target of 1235. Britannia is a buy with a stop of 6095, target of 6250. And HDFC Bank is a buy with a stop of 2095, target of 2140. And because the HDFC Twins and Kotak and IndusInd, etc., are doing well, probably it's worth trying to take a long on the bank Nifty. But the individual stocks is where most of the juice is there. I don't think index is going to do a whole lot.
Okay. Ashwani, take your point. I get your call on the bank Nifty. I mean, HDFC twins are finally doing what they do best. They're moving higher. But one stock, ICICI Bank, which has had a rough week. I mean, just when people thought there's a clear breakout, maybe something really will come through, 300 plus, it's reversing course. Your thoughts and the levels to watch here now?
See, it's basically choppy and, you can say 260 downside, 300 upside. You don't need to see levels on things which are stuck in a range. You have stocks which are moving to new highs. See, money will start to move away. Suddenly, RBL Bank starts to outperform. Where is that money coming from? So, Kotak, RBL, IndusInd, HDFC Bank, that's where you need to look at. No need to look at ICICI Bank.
All right, Ashwani, point taken. Thanks a lot for joining us. We will keep coming back to you all through the trading course. But one stock which is on our radar right now, sitting at upper circuit, is NDTV. It's up in trade after SEBI ordered Vishwa Pradhan Commercial to make an open offer to the company. Nimesh now joins in with more details. Nimesh?
Hi, Magdalene. So, but there are not much clarity on the open offer price, but what the SEBI order very clearly says, which came last evening, was that Vishwa Pradhan Commercial, will have to make an open offer for 26% in NDTV. Not only, the open offer, but also they'll have to pay 10% interest to the shareholders, in this open offer. So that's something to watch out for. The order is effective from today itself. So in the next 45 days from now, the open offer has to come from this Vishwa Pradhan Commercial Private Limited in NDTV. It's a long history. Since 2009, there is a bit of battle brewing between some of the investors and the NDTV group, and the fact that this particular company, Vishwa Pradhan Commercial Private Limited, through a call option and loans, indirectly bought some stake in NDTV. So finally, SEBI order suggests that they will have to make an open offer of 26% in the next 45 days, including a 10% interest as well.
All right, that's definitely getting the minority shareholders very excited. 20% up on that stock. Thanks, Nimesh, for getting us all of those details. Right now, we need to take a quick break, but on the other side, we get chatting with Sonata Software's management. The stock is on our radar. We will tell you why when we come back. Welcome back. Before we move on to that promised conversation with Sonata Software, there's some exclusive details that we are picking up with respect to the latest at Fortis Healthcare. Now, the ticker is telling you the same, that the deadline for the submission of bids is likely to get extended by 1 day. That's what we are learning. Let's go across to Nisha for all the details. Nisha, what is the latest?
So, Surbhi, after late night, the results got announced, which got delayed by 1 day. They need to give mandatorily 48 hours for the bidders to really digest those numbers and then put out the bid. So this bid process, for which the binding bid date was 28th, has been extended by 1 day because of the delay in the results. So now Friday, 29th of June, is when all the bidders will have to submit their binding bid. Now, we know that IHH, Manipal, CPG, Radiant, KKR, and as well as Munjal and Burman, these are the 4 bidders which are in the fray and are likely to submit their binding bids for Fortis Healthcare, which is one more issue that has cropped up, and we may want to discuss it further, is also the auditor not signing off on the Q4 earnings. That is going to be a worry for the bidders, and they may ask for more reps and warranties to protect themselves, even if they give a binding bid. So that's something that will need to be watched out for as a follow-up to the Q4 results that got announced yesterday.
Right, Nisha, thanks a lot for joining in and giving us all those details. We will keep an eye out on that story. But the stock on our radar right now is Sonata Software. All the mid-cap IT stocks have been buzzing around. Remember, the stock has a market cap of rupees 3,300 crore rupees. Also, it's up about 111% in the last 1 year, under a bit of pressure today. But if you take a one-year chart, and you see that the stock has doubled. To discuss the company's business outlook and more, we have Mr. Prasanna Oak, the CFO of the company, joining us on the show. Thanks a lot, Mr. Oak, for joining in. In fact, I'll take this opportunity to also discuss the fourth quarter numbers with you, which we did not this time around. So, the total revenue growth that came in was muted quarter on quarter on account of weakness in your domestic business, and also your international business was absolutely flat. So going forward, what sort of revenue growth are you guiding for in FY19, both on the international and domestic front?
Yeah, So, Mangalam, the way that we look at our business is actually splitting it, into the two segments. One is the international business and one is the domestic business. The domestic business we measure on our margins only, not on the top line, because a lot of deals, have larger margins or smaller margins. So, margin is the way to look at it. We grew about 6% year on year. On the international business, we didn't speak in Q4, but for the year we grew by about 18.5% in dollar terms and about 13% in the rupee terms. So both our businesses are growing exactly the way that we had wanted it to. We believe that there is traction, and we continue to offer our differentiated strategy, of using our IP, of digital transformation through our platformation. We have got 5 to 6 IPs. So that has yielded success in the last 2-3 years that we've been talking about, and we believe that it will continue in the same direction. Obviously, we've got to execute it, we've got to watch it, but we're not changing the strategy. That will be our key strategy and the pivot around which we are working.
Okay, so let's talk about this year as a whole, Mr. Oak. I mean, Q4, I believe that the domestic business was a bit sluggish, but overall for this year, in terms of constant and what contribution will come from digital in that top line number?
Good question. I mean, yes, as you rightly said, we got to look at constant currency. There is fluctuations, cross currency, winds, the rupee depreciating, the pound and the dollar moving. See, while we don't give a forecast, we believe that we will be in the same range as last year. We are aiming for that. That's our aspiration. We've got 4 verticals. We're having traction across all these verticals with clients, and we are hoping to do the same for this year. So yeah, definitely trying to do better than what the industry is doing overall.
Right. Mr. Oak, just hang in there for a second. We need to address the markets right now as we speak. The Nifty slipped to the low point of the day. In fact, it's slipped a good 30-40 points from today's high point. 10,744 is where the market is right now as far as the Nifty is concerned. Reliance is slipping from the high point of the day, and L&T is adding further pressure out there. Watch out for the mid-cap index as well. Now 3 stocks in the red for 1 in the green as against 2 when we started the show, and we're seeing sharp declines in the likes of NBCC, JP Associates, as well as CG Power. Adani Group stocks continue to take a beating. Adani Enterprises down about 7%. So we will keep an eye out on the markets, and we will watch out for any individual stock movement. In the meanwhile, let's continue our conversation with Mr. Oak. Thanks a lot, sir, for waiting by. A word on the margins, because you said the domestic business did show an improvement in the operational performance, and now with the increased contribution coming in from digital and international business also maintaining its growth rate, do you think 11% that you did in the last year is likely to go to about 12%, 13%? What is the range that you're working with? The weakness in the rupee also helping you?
Yeah, I mean, all good question. Let me get back to the previous one. I mean, our component of digital is nearly 1/3 of our revenues. That's a question which we had asked. And the way we are also measuring our revenues is what is the component which is coming from the IPs that Sonata has. We've tried to track that across the last year. So we are currently at about 15% of our revenues come because of our own IPs and the services around them. So that's one part of the question. The second is, again, if you look at the margins as we're talking, these two business lines are totally different. We got about 5% EBITDA on the domestic business, but our international business, our EBITDA stands at about close to 25%. We believe that a lot of our costs are baked in, and as we continue to grow the revenues, we should have enough room for investments and to keep the margins where they are. I mean, we'll have to obviously play it over the year. With reference to your last point on the rupee, see, most companies take forward covers. So we believe that the benefit from the rupee depreciation will only come to us in the second half of the year.
Sure. Mr. Oak, I'm just trying to, Mr. Oak, I'm just going to try and slip in a question. 5 seconds only on the chat, unfortunately. You mentioned the contribution from IPs right now 15% of your total pie. To what extent do you see that scale up in the current year, maybe the next 1 year, 2 years? Because that's where the real game is going to lie, right?
Absolutely. I mean, it's IP-led revenues. We have our IP, which is our differentiator, and we have services around it. We grew by about 20-25% in the last year, from about 12% to 15%. We hope to be able to continue that kind of a growth. I mean, that's at least our target, or to do better than that. So that's where we expect IP-led growth, to really help us along with our platformation and all our 5-6 stable of IPs and platforms that we have.
All right, Mr. Roque, thanks a lot for joining in. Wish you good luck for this fiscal and the fiscals going forward. With that, we'll slip into a short break. Come back, we talk about Lux Industries. The management is waiting by. Welcome back. We have with us the management of Lux Industries. Mr. Udit Todi has joined us to discuss more about the scheme of arrangement that the company announced. He's the senior VP of the company. Thanks a lot, Udit, for joining in. Let's keep it brief. You've announced this scheme of arrangement with 2 companies. What are these companies? Are these wholly owned subsidiaries or promoter-hold entities? And if they are promoter-hold entities, how much do the promoters hold in this? What happens to the promoters' stake post this scheme of arrangement?
So there are 2 more companies, one by the name of Ebel Fashions Private Limited, which is having about 200 crores of top line, and which the reported PAT figures were 21 crores. So it's roughly 10.5% at the PAT level and about 18% EBITDA level. So significantly profit making is one of the leadership brands in the legging segment. The other company which you're talking about is JM Hosiery, which again brings in a top line of about 290 odd crores with a PAT figure of 5.5%. So collectively, we're looking at about 500 crores of top line and 37.5 crores of bottom line. Both of these companies are 100% promoter-held companies. And in exchange, when we talk about the merger, in exchange of this 37.5 crores of PAT, the company is issuing 48 lakh new shares. So which will increase the promoter's stake from 73.7% to about 78%. But before going through the merger process, the promoters have given in an undertaking to bring it down to 75% again, to below 75%.
Yeah, of course, that is as part of the listing requirement. Udit, just a word on the profitability of these companies as well. I believe they are profit-making. What happens to the margin profile of the listed entity, Lux Industries, once this merger is through? Is it going to happen in this financial year itself? Because at the end of FY18, I believe you ended close to a 13% EBITDA margin. Where does that number move once both these entities are merged in?
So once both these numbers are merged in, the EBITDA level should increase by 1.5%. And if we talk about the post-merger EPS, the post-merger EPS of Lux Industries Limited would increase from currently 31.38 to 38.75, which is roughly about 24%, 23-24%.
All right.
So the EPS of Lux should go up by about 24%.
All right, 24% increase in the net profit as well as 50% roughly increase in the top line. If you could tell us the growth prospects of these 2 entities. You've earlier joined us and told us about Lux Industries growing or expected to grow at 15% on the top line. How are these 2 businesses growing, JM Hosiery as well as Ebel Fashions?
So when we talk about JM should roughly grow at the same percentage as Lux. And talking about Ebel should grow a bit higher than Lux itself. So, and talking on the profitability side, so when we're looking at the overall consolidated Lux group of industries, we should be growing a bit, in fact, slightly higher than maybe 15% on the top line and much higher in the bottom line.
Do you have to make any immediate fresh investments in both of these entities for either CapEx or any other kind of investment plan?
No such investment plans are envisioned as of now. It's just a plain vanilla merger happening.
All right, fair point, Udit, for joining us and giving us all those details of the merger, broadly indicating that 500 crores of additional revenue comes into the company. Promoter stake goes up from 73.5% to 75%, and these companies will add about 38 crores on the bottom line as of FY18. With that, we wrap up on Chartbusters. Stay tuned to CNBC TV18. Trading Hour comes up next.